Good morning. I'm Peter Milios from the Finance News Network. US stocks have closed near the flat line on Monday as investors geared up for the Federal Reserve's meeting scheduled for later in the week. The S&P 500 inched higher by 0.07%, while the Nasdaq Composite added 0.01%. The Dow Jones Industrial Average added just 0.02%. The Fed's two-day policy meeting begins Tuesday. Traders are assigning a 99% chance that the central bank stays put when it releases its rate decision on Wednesday, according to the CME's Group's FedWatch tool, which gauges pricing in the Fed's funds futures markets. The central bank will also release its market forecast on Wednesday. There's less agreement about what the Fed will do in November, with the market expecting an approximately 31% probability of a hike. Goldman Sachs economists said over the weekend that an increase in November would be unlikely. Apple climbed 1.7%. Goldman Sachs and Morgan Stanley both gave optimistic outlooks for the new iPhone demand. Meanwhile, Ford slid more than 2% as the United Auto Workers strike continued. Stellantis and General Motors, the other automakers facing off with the union, each shed more than 1%. The S&P 500 and the Nasdaq both ended the previous trading week down, marking their second straight week of losses. The Dow finished the week 0.1% higher. In commodity-related news, global mining mergers and acquisitions are poised to reach their highest levels in a decade in 2023, with expectations of continued growth into 2024 and beyond. This surge in M&A activity is primarily driven by increasing demand for metals and crucial to the green energy transition. Fitch Ratings specifically highlights the heightened activity in critical metals such as lithium, nickel and copper, where a structured supply deficit is anticipated beyond 2026. Despite market fluctuations, Fitch predicts that miners' financial stability will hold up well in the short to medium term, thanks to commodity prices remaining above typical mid-cycle levels. WTI crude oil is close to $90 per barrel, driven by tight OPEC Plus production and falling Cushing inventories. City analysts suggest a brief spike to over $100 due to technicals and geopolitics, but they deem it unsustainable as non-OPEC Plus production is expected to grow by 1.8 million BPD in 2023 and 1 million BPD in 2024. Lastly, coffee prices have increased for the third consecutive day due to extreme heat in Brazil, which threatens the next coffee crop. Additionally, the recent strength of the Brazilian currency has reduced the willingness of sellers to export. The hot weather is causing concerns among market participants as dry conditions persist, and rain is needed before October to ensure healthy fruit development. Arabica futures rose up by 1.2% in New York, while Robusta saw a 2.1% increase. The strengthening Brazilian real has also impacted the market, with the currency gaining ground against the dollar for the fourth consecutive day. Turning to US sectors now, energy was the best performer on the back of the rising oil prices. Tech was the worst performer. The SPY futures are pointing to a 0.3% fall. Thank you for listening.